Freddie Mac just announced a new second position loan that could be perfect for ADUs, could finance thousands of new homes across the country and save homeowners tens of thousands of dollars when they're funding the project. Or it could be completely useless depending on one little tweak. And actually, we can email the people in this building today and affect the outcome to make sure it's super useful and saves homeowners a lot of money. The people in this building work at the FHFA, which regulates organizations like Freddie Mac. And I'm gonna briefly explain how this loan would work and exactly what feedback you should be giving them so that we make sure that this loan is usable and really helpful. It could create thousands of homes across the country if we do this right. But first, you need to understand some of the limitations of this new loan so that you understand why we're recommending these specific tweaks. So the great thing about this loan is it's a second position mortgage, right? That means that you don't have to refinance your primary mortgage. That's important because right now a lot of homeowners are sitting on very low rates, like 3%, 4% aren't uncommon. And when you get a new mortgage, when you refinance, the rates today are like pretty high. They're like 7%, 8% is not uncommon. So we're seeing a real crunch right now because nobody wants to refinance their primary mortgage and lose that real good rate. A second position mortgage allows you to take more equity out of your house without refinancing that primary loan. Now by itself, a second position loan isn't revolutionary. There's lots of lending products that take a second position. You can check out our sponsor, Renify, in the video description below this video. But when Freddie does something, it has a huge impact that sweeps across the entire country, and I'll explain why. To understand this, you really have to wrap your head around how lenders work in this country. So when you go to a lender to get a mortgage or a HELOC or any kind of loan, they have to keep a certain amount of money in the bank for your loan. And if they kept that loan in their portfolio, they'd be really limited to the amount of loans that they could make. So they don't hold all the loans that they make. They turn around and sell those loans on a secondary market to entities like Fannie and Freddie, selling secondary mortgages on a secondary market. It's a different use of the word secondary than everything else in this video. So when Freddie says it's willing to buy second position mortgages on this secondary market, that creates a lot of demand. And it really motivates lenders to create new products that they'll be able to sell to Freddie. Lots of lenders will be looking at this as an opportunity. They know that their borrowers don't want to refinance the primary mortgage, but maybe they could be convinced to take some equity out of their house if they have this very appealing secondary mortgage option. But this is where we get to the tricky part. Number one, what kind of limits is Freddie Mac going to set on loan terms, like the max loan value? And two, what kind of products will lenders actually put into the market that they then intend to sell on the secondary market? That second question we can't deal with right now. I just spent a lot of time talking to Julie Felsman from Rate.com. She's really smart, great teacher, but honestly, if I made a video about that, it would bore you to tears, and it's just not the right time. If you do want a video about that, put it down in the comments that you want an explainer about how secondary markets work. But otherwise, let's just focus on the one thing we can really change today by sending feedback to the FHFA. I read through the whole document attached to the press release, and there's a lot of terms that are already set in stone, but then there's a lot of things that aren't set in stone yet. This is a public comment period where you can email the people in this office, and they will actually read your email and take that feedback into account. You should send one of these two messages, or both. Number one, you say, I am a homeowner excited about using this second position mortgage. I want to build an accessory dwelling unit, and in my market, in my region, that will cost me $200,000 or whatever the cost you think it will be. Go high, right? That'll let them know that you live in an expensive market where to get homes built, they need to make the max loan value very high. You know, a $50,000 limit is gonna be a useless product. But if they make it $200,000, $250,000, then they're gonna see people building houses and really using this product, and that's exciting. Number two, you could say, I'm a homeowner, I would love to use this secondary product, except I don't know that Freddie owns my primary mortgage. And so I might not be eligible because of the limits they've put on this. I know, record scratch. One of the very important limits on this new second position loan product is that to de-risk it, Freddie's only gonna buy your second position mortgage if they own the primary mortgage on the house, which eliminates a lot of people. I'll put a link here and below the video so you can look up if Freddie Mac owns your primary mortgage, and that'll tell you whether you'd be eligible for the secondary one. But in any case, creating a secondary market, Fannie's gonna get FOMO. Fannie's gonna wanna get in on this. And it's the first step in getting all this done. So in either case, you gotta send that feedback in. You say, I want a high maximum loan amount, and I want a secondary market that's not limited to Freddie. Here's the thing, normal people don't go to HUD, don't go to FHFA. So if we even get like 20 people to email public comments in or sign the petition, it's gonna be like that scene at the end of Mr. Smith Goes to Washington, where they start bringing in bags of mail. That's what it's like. If there's one thing I've learned from watching old movies, it's that American politics and the legal system are completely governed by large bags of mail showing up at key points during the plot of the movie. And for more information about loans and secondary markets, check out this video. Let's build more housing.